Good morning. It is 7th of June, Friday, 7th of June. It is non-farm payroll day, so everything depends on that big, I think it's the biggest number of the month. So if you're running positions over that, bear in mind you really are just having a gamble because, of course, there's no way we can predict the outcome. Technical analysis goes out the window for a little while over such events. Right, dollar index. I remained bearish if we held below this trend line. We 97.25 is where the trend line is today. So look, we dipped down again, but look, someone wants to buy it down there because we keep getting these long candle wicks just above this trend line, which I added yesterday, which is around 92.65. Sorry, 96.65. Short-term charts look negative. We've got moving average crossovers on the hourly chart. We're trading below all of them, and we're trading below the 100-hour moving average. We're holding the 38.2% short-term fib resistance at 97.33. Now we're trading below the 23.6% fib resistance at 97.11. So this all looks pretty negative to me. Clearly, we need to break below sort of 96.70 to start the next leg lower. The 4-hour charts also look pretty negative to me, holding below moving averages and similar picture really. A close, if we close the week below 97.00, that's certainly going to be negative. That would be the lowest close we've had in the index. Well, for since at least April, or since at least March, I should say. We've got the March low, the April low at 96.75. So if we close below there, is that right? Doesn't look right on this chart. 96.74 the low there, and these lows are 96.74. Okay, that looks wonky to me, but that's what it's telling me. Yeah, okay. So clearly a break below 96.74 will be negative, and if we close below the trend line at 96.64, that will be more negative. Bulls, I would suggest, really would need to see the week close above 97.37 to be in control at the start of next week. Despite the negative candle that we saw on Wednesday, the market held up on Thursday for the Aussie versus the US. We are a little bit overbought, but I'm not too worried about it. I'm sticking with a long. I've got a very small long, which I bought a while ago. Well, I bought it on Monday, actually, beginning of the week. So it's working just. You can see we're hugging that 100-hour moving average really nicely. Someone's got an algo in there buying the Aussie dollar at the 100-hour moving average by the look of it. Now, good support 69.73. That's your 23.6% fib and the 100-hour moving average. So as long as we hold that, all looks good. If we break lower, we really need to hold above 69.60. So if you're long, I'd put a stop in below 96.60. There is some support down here from these moving averages, but nothing major. I think that's the way I would play it today. Get out below 96.60. I'm not even sure if I'd reverse into a short. It's probably a little bit too risky before the weekend. 4-hour longs, not only do we need it to hold above 69.73, but of course we need it to break above this week's high at 70.07. Unexpected pullback in the New Zealand dollar, but I'm still long. The hourly chart is where we need to focus today, and we managed a small recovery, so not a big day, up to 66.43. Quiet day yesterday as we wait for the non-farm payroll number. So again, I've got good support down at 66.00, 65.90. That would be a buying opportunity. As long as we hold above there, longs are safe. We break below 65.80, and I would just get out and then wait for next week. Dollar yen quiet as we wait for the non-farm payroll number. I suggested trading anywhere between 107.90.80 up to these two levels, 107.90.80, 108.40, 5.55, and that held yesterday. So this is obviously key resistance. It's certainly working, and you can see why. Break up through here, we can attack 108.75, and then we've got this fib resistance at 108.90. Euro yen, well, the euro was all about the ECB meeting yesterday, wasn't it? So we spiked down, we held this trend line, we managed to get back above the moving averages, and then we've tested this resistance around 122.20, 122.30, which is holding. So bulls need a break above 122.45. That really should clear the path for maybe even quite a swift move up to 123.00, 123.10. You can see that we should have some resistance there just from the previous price action around that level. And so clearly we're going to have to get up through 123.20 for the next leg higher up towards 123.70, 123.80. On my spreadsheet, trade ideas spreadsheet yesterday, I had us buying the euro down at 112.05, 111.95, which is unfortunate because we only got to 112.12 was the low, so we just missed it. Well done if you managed to get into a long, but it's a good 7 pips above where I was looking to buy. So you can see we bounced off this very minor trend line and 55-day moving average. Looks good. We haven't managed to push above we haven't managed to close the day above the 100-day moving average, which is at 112.74. So we really need to close the week above 112.75 for a more positive outlook next week. And clearly we've got to get through these little spike highs up at 113.0608. That's pretty much all I can say on the matter. We can then push up quite quickly to the 200-day moving average, which is around 113.6070. And then we've got the March high at 114.40, 114.50. On the downside, clearly we really got it. Well, I'll stick with that that buy level. I don't think we'll see it again, quite honestly. I would stick with that buy level down at 112.05, 111.95. That still looks like strong support on the hourly chart. The pound I got bullish after that bullish candle last Friday. Okay, we did manage to rally, but we were in a holding pattern here, really. You can see we're holding above the moving averages, which have now crossed over to give us a bullish signal. Price is holding above the moving averages, which gives us a bullish signal. So I really need this to take off now. I really need it to get well through the 127.700 area, come up to 127.40, 127.50, and I need us to close the week above 127.50 so that we can get up to the 127.90, 128.00 area at the beginning of next week. It all depends on the non-farm payroll number, I guess. But as you can see, for some reason, we're struggling up there at 127.40.50. I don't know what it is that's stopping us get up through there. Okay. In gold, I decided to stick with the bulls, buy on a pullback. Yesterday, we held the first 23.6% fib at 13.28.27 nicely. A little bit of recovery, didn't manage to retest the previous high. This level will be even more important today because the 100-hour moving average is coming up to lend extra support there. So as long as we hold above 13.25, this all looks good. I'd have a stop in at sort of 13.24, 13.23. And if you're out of your longs, I would just leave it. Then there's no point in getting into a fresh position, swing position before the weekend. But I think gold can do all right. As I say, it's down to the non-farm payroll number. We need a weak number for a weaker dollar. Silver's wanging around inside day yesterday, so we didn't cover any new ground from Wednesday's price action. We are trading quite nicely, just holding this trend line that I added yesterday after bottoming out at the fib and 100-hour moving average support. So good recovery. If you were buying there in the morning after that suggestion, we had a decent recovery. But we pulled back again to the trend line, so I need this to hold above 14.85, 14.80. Below 14.70, maybe we should be out of longs and then waiting for the next signal next week. Oil has become oversold and is holding, and we've got an inside day yesterday with a moderately bullish candle. I really would like to see a buy signal here, or I'd really like us to see us hold a good support level so I could suggest jumping in, but I'm just not seeing anything. I'd love an excuse to buy after such a strong dip in these oversold conditions, but yeah, I'm just not seeing it really. Let me just throw a trend line on here and see if that gives me anything. No, not really. So I'm going to have to leave it alone. There's nothing that I can deduce from this. It's probably risky still being short. We could certainly consolidate sideways, and in fact I could argue that that's already starting to happen. So maybe we'll just trade from sort of 51.00 to 50.60 as a support band up to that 53.60, 53.70 resistance area. Yeah, I can't decipher much from this, so I'm going to have to leave it. Even the S&P higher yesterday. So what was the low there? 28.12. I was talking about that strong support level down at sort of 28.10 or 28.05. 28.10.05 I think is what I had actually. So we bounced just above there. We could easily get up to 28.65, 28.70. Now, someone gave me an idea yesterday. Gavin, thank you, Gavin. My good friend Gavin from Dundee sends me loads of charts and stuff and often gives me some good ideas. And he pointed out to me that this could be actually a new head and shoulders pattern forming. So this could be the right shoulder. This could be a whole head within a head and shoulders, actually within a head, which does often happen. And then now we could be building the right shoulder. So we could. And I would suggest if we hold below 28.65, 28.70, that could be the case. Now the neckline's lower, of course, down at 27.29. So it's just something I'm going to watch as we go. It's certainly a plausible idea. This head and shoulders pattern obviously has failed, but I'm keeping that trend line on there because it does seem to be having an effect. Okay, so we'll just play out. We'll watch the non-farm payroll number, and I'll do another video over the weekend.